Hey everyone, this is James with WSTrades.com. I want to talk about Fed rate hikes, inflation, and the stock market. So last time we had an interest rate hike, it was a 0.5% or 0.5%, and markets ripped the day of the announcement of the rate hike. And then the next day we had a massive sell-off. It may have been overnight, futures dumped, or the next day markets had a big turn down. We're seeing the same behavior this time. Yesterday, the Fed announced a 0.75% rate hike. Markets were ripping even into after hours trading and into overnight trading. Futures were cooking. And I kind of had a feeling that it was all going to disappear at some time in the night. And then that's what happened. I woke up this morning and futures, all the major indexes were down over 2%. So we're seeing the same behavior with this rate hike here by the Fed. So when interest rates go up, people are going to get paid more to have their money in their savings accounts. So, that's why sometimes you do see this quick correction in stock prices because people will start to have incentive to take their money out of the stock market and put it into savings accounts. Typically, it's not a long-term effect, like markets just don't keep going down, 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 down just because of a rate hike, but sometimes we do see this quick reaction to the Fed raising interest rates. So with interest rates going up, another effect of this is people just having less available cash because it's going to be more expensive to borrow money with interest rates up. So since people are going to have less money to spend, prices for goods hopefully will come down so people can afford them. So that's what the Fed is trying to do here with these rate hikes. The Fed has been printing just enormous amounts, ridiculous amounts of money for years since the pandemic started, and this has caused this rampant inflation that we are seeing right now. So now that they devalued the dollar like crazy, now they're raising interest rates and trying to curb some of this inflation and kind of get this back under control. So it's a supply and demand situation when it comes to inflation, the prices of goods, and interest rates. So the Fed is really just raising these rates, trying to get the prices of goods to the consumer to come down and be more reasonable because people are getting beat up pretty badly right now. The prices of everything are out of control right now. So I just kind of wanted to talk about what does it mean when the Fed jacks these interest rates up, what is going to be affected and how it's going to be good for you, how it's going to be bad for you. If you thought any of the information in this video was useful, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.